I don't think it's anybody's birthright to do well in the sector or to continue to be the only player or big player in the sector, both sides. So come in new and dominate the sector, or you have to eventually execute and do what's right for the consumers. I actually haven't seen a lot of that from anybody in terms of I have seen that, and I have mentioned that a few times, but those are very, very small organizations still. They are not very large organizations, and I think the intuition of what does the consumer really need. See, the consumer only needs 4 products: health insurance, term insurance, pensions, and child cost planning. Besides that, consumer does not, I'm saying in large quantities. Besides that, you can create products which may or may not fulfill consumer needs. So I guess a lot needs to be seen, and it's about whoever can keep their, themselves grounded to the situation and execute well over a 5, 10, 15-year period, certainly will get a large share of the market. Now, I don't know if either of those two, I have no view if either of those two names is going to do it or not do it. All I know is it won't be won by money. That much I'm pretty sure of, or by heritage. It will be won by execution.
Banks are claiming that we are not getting the liability because money is moving to stock markets. Mercedes CEO told me that luxury cars are not selling because everybody is investing in SIPs. Is that the experience for the insurance industry as well? That money is moving into SIPs, nobody cares about insurance?
We continue to grow. We continue to grow, we continue to do well. So, I don't think that's bothered us, and I don't think that's bothering the insurance industry. See, the insurance industry has a very secular growth. It just continues to grow at a particular rate. I've been in this industry now for 17 years. I haven't seen a 3-year phase when the industry hasn't grown at between 10 to 15% over any 3 years. Single years you will have pros and positives. It's a very acyclical industry. I think the competition is more between FDs and the market. And I think as a country we were more tuned towards physical assets, fixed deposits. Like, think about it, right? Someone like me, who you should assume has been investing in stocks, has never invested in stocks. He's 100% fixed deposits person. The only stock I own is PolicyBazaar, right? So, or PB Fintech. So, that's how we are. We were a risk-averse society. We used to think it was risk. Till it became clear that, look, over a 10-15-year period, there's actually very little risk, because there's almost never been a 10-15-year period in history when people haven't made money in the stock market, right? So I think that long-term SIP-based investment is a very welcome trend. I guess there are good quality businesses out there and poor quality businesses out there. And today, the distinction between them may quite be lacking, even today. And that happens in every sort of, if you call it a bull run or whatever you want to call it. And yes, that's something to be watchful of, and how the retail investors can have the knowledge to see. I'll put it to a simple reason, right? I think a retail investor should never invest in a stock where he believes he can make money in 3 months. And unfortunately, that's what a lot of people do. Long-term investing is usually okay. It's not that bad a thing. And I do believe keeping a large part of your long-term, if you have a longer than 5-year horizon in equities, is a fantastic thing compared to leaving them in fixed deposits. Now, whether that hurts banks' ability to, generate capital and lend to others and make some margin, our job as a country is not to keep banks afloat. Our job as a country is to do what's right for the consumer.
You said cat amongst the pigeon when you indicated that there are diversification plans, you're planning to incubate hospitals. Why would you do that? And you're really looking at diversifying the model, or this is something which could be a lab experiment, you will scale it up beyond a point only if it's successful?
Let me first of all explain. It's not a PB Fintech project.
Oh, it's not a PB Fintech project.
A PB Fintech is perhaps a minority investor.
Okay. You've decided how much money you will put up front?
How can I decide? That is for the board to decide, right?
Has the board decided?
No.
Okay.
The board has not decided. In fact, We're still trying to figure out if there are ways to do it in a low asset way, right? Without physical assets, etc. We're struggling with that. Is there a way to do it? But we're trying very hard to see if there is a way to do that. The question is very simple, right? Today, when I speak to both hospitals and insurance companies, both seem to have issues with each other, right? I know the insurance world, I don't know the hospital world, right? So, I ask all the insurance companies that if you're so unhappy with the hospitals, and what is it manifesting in? It doesn't matter if people are unhappy with each other. It's manifesting in customers having a poor experience at the point of claims because of this trust gap between hospital customers and insurers. It's a very simple thing, right? A customer declares more to their doctor than they have declared in their insurance policy. And thus the insurance company, before settling the claim, wants to know what discussion happened between the doctor and the customer, right? Because a customer, when going in for the operation, might tell his doctor, yes, I smoke.
Yes, of course.
But he may not have. And now, if that is declared, that is, insurance is a product where you cannot do all this, right? So then I ask insurance companies, okay, this is a problem, understood. This and many other things. So what would you do differently if you had your own hospitals? And they don't understand hospitals, but they say there is a list of things that they would want to do differently if they owned those hospitals. By the way, that doesn't mean the hospital is making less money. None of the guys say that, oh, I would like to make less money. No. It's all about following standard protocols. It's about higher trust. It's about being able to do more daycare treatments. It's about, not hospitalizing as much. Doing what's right for the consumer, but still following standard protocols, which are more consumer-centric and insurance-centric than... The basic thing is, when a customer walks into a hospital, he is a revenue for the hospital, and he's a cost to the insurance company. They're the opposite sides.
Yes, so true. Brilliantly put.
Right?
Yeah.
And the consumer in that situation usually sides with the hospital because he believes the hospital is on his side. As long as the bill is being settled by the insurance company. The moment the bill comes to the customer also starts to be in the same place as the... So I think this lack of trust can only be sorted in one way. Okay, insurance companies, run your own hospitals. They say, but we don't have the skill set. Okay, that's fine. Somebody who knows how to run hospitals can do it for you. Okay, we don't have capital. That's not a problem. The capital could be there. But it changes the frame of thinking. Just think about it. If you had 10 million customers in a city, in two different cities, and in one, the hospital was owned by the insurance company, and in one, the hospital was separate. Now, take an extreme situation. A dengue outbreak happens in one city. It is very loss-making for hospitals in one city. It's very profitable for hospitals in another city. Because in one city, the hospital makes money if nobody comes to the hospital. Because it's owned by the insurance company. In another city, the hospital makes money when people come to the hospital, right? And hospitals also say that it's not just hospitals. There's a consumable cost, there's a medicine cost, there's a doctor's cost, there is all kinds of... I think this conflict of interest somewhere needs to be solved. And I think some people are trying to do it. Maybe some people are coming from the hospital's perspective, some people are coming from the insurance company's perspective. Now, the question is, why does the management of PB Fintech have to get involved in something like this?
Exactly.
Right? It's a very fair question. Because one of the biggest beneficiaries of this is the insurance industry. That the insurance industry can grow faster. The fastest growing entity in the insurance industry, and now a pretty scaled up part of it, is PolicyBazaar. How can PolicyBazaar not benefit if the insurance industry grows faster? If the insurance customers have a better experience, right? And the value generated there is going to be much, much, much more than the small amount of money. So PolicyBazaar, if anything, is a catalyst in making it happen. So PolicyBazaar is so desperate to making it happen that it wants to take board approval to invest a little bit to make it happen.
Okay.
Right? But it has no interest in being a long-term equity holder.
Okay.
It has no interest in owning assets. It is doing it for its own sake.
Understood.
To make the insurance market grow better. To make health insurance grow smoother. To make customers have better experience. So that at claims there's no friction. And thus the benefit to policy... Just think about it, if PolicyBazaar could grow at even 5% extra every year for the next 10 years because of a venture like this, that more than 20 times pays for the little bit it may do in terms of making it happen, right?
Great point.
And that is the reason it's happening. It's not happening because PolicyBazaar believes that investing in hospitals is a great idea and that'll be a very profitable venture. No.
Now that you're explaining at
PolicyBazaar certainly does not believe that, right? That is not what its thinking is. If it could do it without investing, it would like to do that. The management is struggling to find that way in which you can align interests without owning control of the asset. We are really struggling with that, and we're trying very hard. We're talking to lots of people, we're trying to figure out if there's a way to do it. But so far we don't have an answer to how it can be done without control of the asset.
Understood. Okay. So I'll just wrap it up with one final question. PolicyBazaar got incubated by by PE investor InfoEdge. Are you looking at now using your balance sheet strength, because you've got cash on your balance sheet, to incubate new ventures? For
No,
example?
not at all.
Not at all. Okay.
Not at all.
We should not consider that.
Not at all.
Okay.
Not
I
at
just
all.
wanted to clear the air on that.
I want to just clarify, right? InfoEdge invested with us, and we have never had a single operating relationship with InfoEdge. Till 2 years ago, we did not even have their insurance policy.
Okay.
We fought very hard for 4 years, and finally we got the insurance policy on absolute merit. I would actually say we got it on more than merit, right? So we had to really, really try hard. So we lost the case 3-4 times and finally got it, right? So that's our relationship. And so that's InfoEdge's thing. We are not that at all.
Okay.
If we seed something, it would be only for the benefit. I've said it many times.
Okay.
The only job we have is to make PolicyBazaar stronger.
Okay.
The core business.
And the core would be anything in and around insurance.
It's all insurance.
Okay. Fair point.
We want to make that stronger and stronger and stronger. And for that, if it takes an investment here, an investment there, yes, we would do it. But the lens we will wear is not the profitability of that investment. The lens we will wear is how does it benefit PolicyBazaar. And I think that is a very, very core point. So we are a strategic investor, not a financial investor.
If you like this video, then like, share and subscribe to ET Now.